This is your host, Joe DeCharity, coming to you live from downtown Flushing, New York. I am in the eye of the storm, but nothing's going to stop me from delivering my important message to you tonight. If you don't know me, my name is Joe DeCharity. I am an entrepreneur that was tricked into becoming a CPA by my father because he was afraid of the path I was leading, and I don't blame him. I don't blame him one bit because look what it's become. Look what I've become. I love what I'm doing, and I'm gonna be talking to you tonight about one of my top three favorite subjects, which is beating the IRS at their own game. Okay, so I have to apologize in advance to my friends across the border in Canada. This will not apply to you because this unfortunately has to do with the terrible, terrible rules and regulations that us small business owners in the United States of America have to deal with. It's hard enough to start a business. Okay, even before the IRS was around, it wasn't easy. Think about it. Before the IRS was around, there was no internet, there was no YouTube. I mean, you had to go to the library to get information, and you had to actually buy postage and go to the post office and send your tax return in the mail. And then forget about it. If you were getting a refund, there was no way to check on it. I don't even know if they had telephones back then. But we've come a long way. And unfortunately, so is the government. And they are on us like white is on rice, folks. And if you are a small business owner in the United States and even anywhere else in the world, I don't think uh, government being on top of innocent small business owners is only has to do with the United States. But unfortunately, I don't know the tax laws in all the other countries. So I'm going to focus on what I know. And I know a little bit about this because I've been doing this for over 35 years. I have been battling with the IRS head to head in successfully defeating them in hundreds of tax audits. I've gotten millions of dollars in taxes forgiven through offers and compromise, penalty abatements, and I've even gone head to head with them in criminal investigations, which I wouldn't recommend for anybody. It's really no fun. So what I do today is I spend most of my time devising ways to stay out of the loop, out of the dragnet, and stay under the IRS radar. And there are ways to do it. And I'm going to take you through tonight one of the most amazing strategies that I have ever come across that is so simple and so unknown that it boggles my mind. So tonight I'm going to show you how to take what for over 25 million small business taxpayers, the heart and soul of the American economy, the micro businesses, the mom and pop shops. I am going to show them, number one, that they have a big problem and they may not even know about it. Okay, so, it's not what you know, it's what you don't know sometimes. And a lot of times, and I could tell you horror stories and I can have people on as guests that'll tell you their own horror stories about getting audited and the bad things that the IRS does to unsuspecting people. The good news is that you don't have to do it in the dark anymore. I am here to inform you. I am here to give you all of the secrets that they don't want you to know. The IRS, Congress, the President of the United States does not want me to share this information with you. but I'm going to do it anyway because I don't care what they say. Actually, I do care. I was only kidding, Mr. Trump. Uh, I care. I am a law-abiding citizen, and that's the great thing about this. Everything that I've come up with is 1,000% legal, legitimate, and it's there for the taking, folks. So let me get on with this. So if you are a business owner and you get that strange chill down your spine when you get one of those letters from the IRS, imagine if you could eliminate any of that fear. Imagine if you could start taking your business write-offs safely, not having to worry about, am I overdoing it? Is this going to put up a red flag? What if you don't have to worry about that? And at the same time, what if you could protect your family, protect your business, and your assets? Imagine that. So first, let me describe to you exactly what the problem is. Now, don't get scared. He's a good puppy. Okay, he's a good doggy. He's just a little hungry. And the problem is that he belongs to the IRS. And the IRS is viciously attacking sole proprietors. And I'll tell you why. They are unfairly targeted. They are grossly overtaxed, go largely unprotected. And last but not least, sole proprietors get really no respect. Sole proprietors are the Rodney Dangerfields of business. Okay, and if you don't know who Rodney Dangerfield is, you can Google him. One of the funniest guys that ever lived. You could watch him in Caddyshack. Oh my God, one of the funniest movies ever. And that actually had nothing at all to do with taxes. But Rodney Dangerfield was in it, and I love the guy. And he got no respect, just like sole proprietors. So you might be saying to yourself, well, what is a sole proprietor? You know, there's been a lot of stuff going around with the SBA and all of these packages that they're giving people. And they have, okay, if you're an independent contractor or you're a 1099 or you're self-employed or you're a sole proprietor. Well, guess what, people? They're all sole proprietors. I pointed this out to my friend Pat Wally. You know, when all of these rules and regulations were coming down, they said on April 3rd, 2020, if you're a 1099 contractor or you're self-employed, you can apply on April 3rd. But if you're a sole proprietor and you're an independent contractor, you can apply on April 10th. Well, that made absolutely no sense to me because, and I'm going to tell you why. Who are considered sole proprietors, folks? Who are they? Basically, anyone trying to make extra money, part-time or full-time, that is outside of their W-2 job. So if you're an employee and you're raking lawns in the fall on the side, you are a sole proprietor, believe it or not. You automatically come under the jurisdiction of about 19,000 government agencies. Think about that. You're just raking leaves. Okay, you're supposed to be collecting sales tax. You're supposed to have workers' comp insurance. Believe me, you don't want to be raking leaves without some protection. So really, it's any sort of small business. If you are a solopreneur, let me clarify that. I am a solopreneur, but I'm incorporated. I'm not a sole proprietor. And that is a big, big difference. And that's what I don't want to let the cat out of the bag, but I am a solopreneur. But most solopreneurs are considered sole proprietors. And guess what, ladies and gentlemen? If you are an LLC, you are automatically considered a sole proprietor if you are a single member LLC. Okay? Unless you make an election to be taxed as a corporation. Which really leads me to the question of, if you're going to be an LLC and then you're going to ask to be taxed as a corporation, why don't you just set up an S-corporation? But that, and I'll tell you why, because, well, I don't want to go down that road, but it creates more work for the attorneys, but I didn't say that. And I just skipped ahead. A single member LLC is considered a sole proprietor for tax purposes. If you're selling anything online, so if you're an Amazon affiliate, you are automatically a sole proprietor. You see, you don't get to choose. That's a big issue here, folks. You don't get to choose. Now, if you go online and you start doing research about, what's the best business entity I should be, and they all say, the SBA, the IRS, well, sole proprietors are the simplest. They are the simplest. Well, of course they are. You don't even have to ask to be a sole proprietor. So why are they saying it's so simple? It's like, it just boggles my mind, the information that's out there on the internet. And just because it's on the internet, folks, doesn't mean that it's true. Okay, unless I'm saying it. Just because you see it on YouTube or a website or a blog, it doesn't mean that it's true. So when you look at the IRS and the SBA websites and they say that being a sole proprietor is the simplest, well, it is true, but it's also not the best way to do business. And I'm going to get into that. So if you're selling anything online, if you're an eBay, selling stuff on eBay, and I knew a guy that, I knew a guy that knew a guy that knew this guy that was selling coins on eBay. And, he sold a couple of $100,000 worth of coins on eBay. And he forgot to tell the IRS about it because, he considered it a hobby. He thought it was a hobby. The IRS didn't think it was a hobby, so they sent him a bill for like $80,000. And, that he got somebody and they cleared it up. But, he said, "Oh, I'm sorry. I forgot. I sold this stuff." And you don't want to be put in that position. So, and that's another thing, folks. So, well, I'm going to jump ahead of myself again. I'll go to the next slide. So I want to keep you a little bit hanging here. So basically, if you're trying to make money outside of your regular job, some people call it a side gig or whatever. Doesn't matter what you call it. If you are trying to make money that is not coming from an employer, you are probably a sole proprietor. Okay, so I just had a potential new client. I'm not going to mention your name in case you are listening. I'm not picking on you, but she is an affiliate for this finance company. And that interested me because people are always, asking me for money, to borrow money from me, and I don't have any money to lend. So I said, well, if I could send me the link, I'll be an affiliate of yours. And then if somebody asks me for a loan, I'll just send them to this website. And now if they take a loan out, I'm going to make money and she's going to make money. It's beautiful. But what I didn't tell her is she's going to get a 1099 for that money and she's considered a sole proprietor. So, who else are sole proprietors? There is a segment of the economy that I call the accidental sole proprietor. And I hinted at this. These are people that don't even know that they're in business. Okay? They know that they're in business. They know that they are making extra money, but they don't really consider themselves as business people, let's say. So before I go on there, I'm gonna put a couple of links in here. One is to get in touch with me. All you have to do is go to timewithjoe.com, and you can book a free chat with me on this subject tonight. If you book a call with me, I'm assuming you're going to be calling about this subject. If you call in to sell me insurance or investments or something, uh, I have a different link for that, and I'm not posting it. So just if you're going to contact me, please make it be about your business that you want to start, or your business that you want to fix, or you just want to talk about business. Okay. But you can go to Time with Joe and connect with me. So who are the accidental entrepreneurs, the accidental sole proprietors? Well, the most obvious one to me is anyone getting a 1099. So if you get a side gig and they give you a W-9 form, okay, a W-9 form, I'm going to put that in the chat, means you are getting you will be getting, I can't type and talk at the same time. W-9 form means you will be getting a 1099 form, which is reported to the IRS. Now, what does that mean? It means that if you forget that you had that job and you file your return and you forgot about that 1099 or got lost in the mail or whatever, about 6 months later, after you file your return, you're going to get a bill from the IRS saying, "Hey, I know you didn't mean to do this, but you owe us, $14,000 because we know about the money that you forgot to report." So, the 1099s are common now because, like I said in the beginning, way back before the internet, when the dinosaurs were still roaming the earth and we still had to pay taxes to the IRS, everything was done by mail, by hand, and 1099s were a little known role. I mean, they existed. The IRS wanted people to get 1099s, and they wanted employer and business owners to issue 1099s only because then they would know who would owe them taxes. I mean, it's not that big a deal. But it was such a pain in the neck. I mean, it was just more paperwork for business. And who needs more paperwork? So they forgot about doing the 1099s. And, millions of people that should have been considered sole proprietors flew under the radar. I mean, let's face it, that, who has time to file forms and pay taxes? So we just forgot about it. And the IRS they didn't forget about it. What happened was they created this thing called the internet and the information highway. And then there was 9/11, which meant that everybody had to open up everything to the government. And all of a sudden, the government knew about all of these people that forgot to report their 1099s. Oh my God, what a surprise. So anyway, and then for some reason, the IRS put this extra question on businesses' tax returns. I mean, it's just a little question. And it says, oh, did you pay anybody that you were supposed to give a 1099 to? And if you check no and you were supposed to, only bad things could happen. That's all I could say. Uh, if you checked yes and you forgot to send them, only bad things could happen. So, when you sign a tax return, you're basically certifying that everything on that return is accurate. Now, it's just a little teeny weeny little box on page 3, I think, and it depends on if you're a C-corp, an S-corp, a partnership, or whatever. But, it's just a little box. And, what business owners don't realize maybe is that if they look right below where you sign, it says under penalties of perjury. And it's just one of those little things that the IRS likes to keep in their back pocket in case there's something else that you forgot to report. So they're going to add up all these little things that, you forgot to check off, or, you can't leave it blank. You got it. If you leave it blank, that's 3 red marks. You get enough red marks, you're going to get audited. Okay, so it's a little box. It seems harmless enough, but it's something called checks and balances because they trust us. They just want to make sure that we didn't forget. So they put these little checks and balances in the system, and all of a sudden, we got like an extra 3 million businesses just popped up overnight. It was amazing. It was amazing. It was almost like the politicians, the promises came true. They created jobs, but they really didn't because those businesses already existed. They just weren't on the books. So enough of the 1099s. So if you get a 1099, you are a sole proprietor, regardless of what the SBA says. You're a sole proprietor, and I'll tell you what makes you a sole proprietor. Whether you get a 1099, you're self-employed, you're a sole proprietor, you're all filling out the same tax form, Schedule C on your Form 1040. Okay, and it says sole proprietor. That's the form. So I don't care if they call you a 1099 contractor, an independent contractor, whatever. That information is going on your tax return, whether you like it or not. So, a lot of, this new sharing economy created a lot of businesses in the form of Uber and Lyft drivers. Oh my God, what a great concept. I love Uber. I can go anywhere. I don't have to worry about calling one of those cabs and praying that they're going to show up. And those poor Uber drivers, they didn't realize that all of this money that they were making, they were going to get a 1099 for it, and they were going to have to report it on their tax return. And they weren't actually making as much as they thought they were making because now they got to pay taxes on this money. I don't know what this world is coming to. If you're an author or a speaker, you are a sole proprietor, whether you like it or not. Now, a lot of authors and speakers never make any money. And that's unfortunate, but that's the way it is. And I am one of those people. I've written several books, and I'm, at least 5,000 or 6,000 in the hole. I did get a royalty. I'm due a royalty check from my friend. I'm not going to say who she is, but I think I earned a little over $11 last quarter from my itty bitty bookkeeping book. Oh, I didn't say that. But anyway, if you're an author or a speaker, you are a sole proprietor. And I'm going to tell you why that's important later. because it might save you a ton of money on your taxes. Anybody in multi-level marketing, network marketing, send out cards. I'm becoming a send out cards rep because it just makes so much sense. These are great cards. And this is what got me. Because I am a CPA, I can do math. And it turns out that I signed up as an affiliate and I looked at how much the cards were, plus the postage, because it doesn't include postage. I said, I pay twice as much as that when I go to the store to buy these cards. And they're not as nice. So now I'm going to be a Send Out Cards affiliate, and that is a network marketing thing. And any money that I make from if I sign one of you up, and you can contact me about that if you want. But if you sign up with me and you're not incorporated, I just gave away the whole secret. But if you sign up with me and you make money, you are a sole proprietor. Any other kind of sales, I think I've made my point here. Anything like what I said, if you're trying to rake your neighbor's lawn, you're a sole proprietor, whether you like it or not. Now let's get into the nitty gritty here. Why is being a sole proprietor, you're saying, so bad? What is so bad about it? I'm making all this stuff up. Some people think that I overreact. Sometimes maybe I do. But why is it so bad? There's 25 million of them. And all that did, when I found that out about a year ago, all that did really was change the whole focus of my business. Okay, think about that, folks. I've been a traditional CPA, well, never traditional, but I had regular corporate clients. I had some large construction companies, trucking companies. Those were my bread and butter accounts. Okay, regular established corporations. And then when I was doing some market research about a year ago, I found out that from the SBA website, which I had been on before, but it didn't hit me, that over 25 million businesses out of 30 million businesses, okay, think about this. There are 30 million businesses in the United States. 25 million are what they call non-employer firms. Non-employer firms. Now, I saw that a long time ago, and I just assumed that meant that was people like me, a corporation. I don't hire anybody except myself. I assumed, which, what that means, I should never have assumed. I assumed that they were corporations. And I assume that most businesses that, they start out as sole proprietors, and once they start making money, they incorporate. It's common sense. Well, apparently it isn't. And once I found that out, I said, oh my God, this is a big problem. This is a big problem that most people don't even know that they have. The people that know that it's a problem are the ones that have been audited already. Now, I mentioned in the beginning that I've successfully handled hundreds of tax audits. Hundreds. Okay, now some of them were payroll related, some of them were sales tax, but most of them, over 85% of them, were individual sole proprietors that got audited. Okay, so if I did some math in my head, if you figure I worked for some pretty large accounting firms over the first 10 years of my career, and we did anywhere from 100, my first job, we actually did over 1,000 tax returns, but those were individuals. Okay, but out of all of the CPA firms I've worked for, we did from 500 to 1,500 business tax returns. Okay, people didn't come to us that were just, they weren't candy stores, most of them, because we charged a lot of money to be accountants, to be CPAs. And out of all of those returns, which were primarily corporations, regular corporations or s-corps, and including the thousands of businesses that I've worked with, we're talking, let's say, roughly 30, 40,000 tax returns that I've been directly or indirectly involved with. I've seen 3 S corporations audited, and all of them had major red flags that you could have said there's a good chance that this company is going to get audited. If you did a sample of the sole proprietors, now understand this, the people that come to CPA firms are normally not sole proprietors, because if they come to us as a sole proprietor, we are incorporating them. Little did I know that there are millions and millions of sole proprietors that get audited because they got a big red target on their back. And there's reasons for that. But that's another story. Being a sole proprietor is also bad because you have no control over how much you pay in self-employment tax. If you make $10,000, which is way below the poverty level, you are paying about $1,500 in self-employment tax. Okay, that's just not right. Okay, so you are being taxed at 15% on your net profits. Sole proprietors have no legal protection. Now, I'm not a lawyer, but that was one of the first things I learned in CPA school, that sole proprietors have in other words, their business and their personal assets are combined. So if something happens with the business, your personal assets are at risk. That was one of the main reasons why you wanted to be a corporation. Okay? Now, if you're an LLC, well, you took care of this. You took care of the legal protection. But guess what? You didn't take care of the first 2. You didn't take care of the first 2 because you're still filing as a sole proprietor on your personal tax return. Unless you have made an election to be taxed as a corporation, which I mentioned before, which boggles my mind. Like, well, if you're going to be a corporation, why don't you just incorporate and skip the whole LLC thing? In states like New York, it costs twice as much to become an LLC as it does to become a corporation. And last but not least, my friend Rodney Dangerfield says, I get no respect. That is a fact, people. That is a fact. I'm not making this up, because I know that when a corporation goes into a bank for a line of credit or a loan, they get the corporation loan forms. When a sole proprietor goes for a loan, they get the regular loan forms that you would go if you were just going in to the bank as a regular customer. In other words, they don't look at the sole proprietors as a business. They just look at this, oh, you're coming in for a personal loan. Now, if you have a sole proprietorship that has any sort of assets like accounts receivable, inventory, I can pretty much guarantee that you're going to be a corporation, because it's very few and far between sole proprietors that are making any kind of real profits, that have not hired a CPA and or an attorney that basically told them you need to be incorporated. So if you're not getting the gist of what I'm saying here, people, it is not good to be a sole proprietor. But guess what? I was a sole proprietor once when I had my first real business. I was an ice cream man. And if you know me and you know my story, this was one of my favorite stories, because It was the semester before I was going to be on my entrepreneurial journey and I was going to become a massive success. I said I was only going to CPA school because I wanted to learn about business. And I said, hey, I'm going to run my first legitimate business. I ran the illegal casino in my driveway when I was 10. I got shut down. And I said, I'm doing things the right way now. So I leased an ice cream truck. It was all legit. I signed lease papers. I signed a bunch of papers. And, it was awesome. I made money. I had fun. I made my own hours. All my friends were working in like department stores and everything. And I was laughing at them. I would get up at, roll out of bed at 10 o'clock, put my shorts on, be on the road by 11. And I'll never forget, turning down that tree-lined street in Brightwaters, New York on Long Island. And it was near the end of August. And I was going to finish my last week of my new business as a success. And I still feel that it was joy because I said, this is it. I'm a successful businessman. I proved it. I ran an ice cream truck for 2.5 months. I'm going to my last semester in school with cash. And I had a ball that last semester. And I got out and I got my CPA job. And 6 months into my job, disaster hit. I got a letter from the New York State Sales Tax Department with a big red stamp on it that said tax warrant. And I thought I was in trouble. Seriously. I thought I had to hire an attorney. I called my grandparents up. I said, I might have to cancel my trip to come and see you because I got this legal issue hanging over my head. I don't want to get into it, but it might be big. I might be looking at some jail time here. And, I felt like I was about to go over a cliff. And I'm not dramatizing this, people, because I wanted to be a CPA and now I got this tax warrant hanging over me and I didn't know what the heck I did. Okay. I wasn't laundering money. It didn't even come time to, file my tax return. So I couldn't have been guilty of tax fraud, but I didn't know what the heck it was. But all I knew was I was in trouble. And lo and behold, it turned out I was working at a CPA firm, and after 3 sleepless nights, I decided to ask one of the accountants. And I said, can you help me out with this? I think I might be going to jail. And he said, yeah, kid, no problem. Why don't you just call the number on the form and see what they want? And it turned out that all they wanted was for me to tell them that I was an ice cream man and I wasn't in business anymore. Case closed. See, when you register, which is what I did, they expect information back, and I didn't know that. So it turns out that this happens to everyone. I didn't know this. Damn, I went to school to be a CPA. I was a smart guy. I did everything by the book. How could this happen to me? But if it happened to me, it must be happening to a lot of other people. And it was. And I realized why all the people that were coming into my boss's office were coming in with scowls on their faces. They didn't look happy. And they would leave even more unhappy. And I didn't know why. It's like, well, they're in business. They should be happy. Well, it turns out that most businesses fail because of things like that. Okay? The simple thing, the most basic form of doing business, a sole proprietor, causes more problems for people than they realize it. Okay? I'm not joking about this, folks. This is serious. I literally changed the whole focus of my practice to help unsuspecting entrepreneurs because there are over 25 million of them out there. And I've met sole proprietors that got audited time and time again, and they didn't know why until they spoke to me, because I have come up with a simple solution. Okay? I call it the IRS Smackdown. What it does is it turns that vicious dog into a little lamb. And what is it? You just create an s-corp. It's simple. Don't do it through LegalZoom or one of those other idiot, I'm sorry I said that, but those online companies, because they do not give you any direction. I just got somebody that went to them and they turned them into an LLC. And what do? I said, well, for another $150, I'll make you the corporation. So they could have saved $150 if they just made them an S-corp. And why they don't do that, I do not know. I do not know. And it's not my job to figure it out, but all I know is that they are causing a lot more harm than they are good. LLCs were created, listen to this, folks, because this is, if you look at the history of why they were created for passive activities. They were created for investors of oil wells, of gold mines, okay? Because those investors could not be a partnership and assume all of the legal liabilities. And if they were limited partnerships, they didn't get the benefit of the tax write-offs. So they came up with this hybrid solution called an LLC for large investors in passive activities to enjoy the tax benefits of the write-offs. So if you're an LLC and you're a single member and it's a passive activity, it's not going on your Schedule C. See, Schedule Cs are for active businesses. It's for the ice cream truck. It's for the lawnmower guy. It's for the unincorporated business. The LLC are for real estate investors. Those are passive activities. So for some reason, people got it in their head that, oh, I got to be an LLC. And if you're an attorney out there, I'm sorry, but if you're creating LLCs for operating entities, you need to go back and look at the tax code, because LLCs do not apply to operating entities. Okay? LLCs may apply to operating entities if there are multiple investors and you got some kind of wacky revenue sharing agreements. Okay, but I'm not an attorney. I deal with micro businesses, sole proprietors. And millions of sole proprietors wrongly became LLCs. Okay, but they can be changed. Okay, so when you're an S-corp, not an LLC, when you're an S-corp, you reduce your audit risk. It's insurmountable. You cannot calculate it, because if I just go by the numbers from the tens of thousands of business returns that I've come across, I'm like 3 out of maybe 30,000. That's like 0.001%, I think. That means you could safely write off your expenses. You know, people like to write off their home office expense. Okay, well, let me let you in on something here. If you're a sole proprietor and you want to write off your home utilities, and that's legitimate, but there's a special form for it. Why is that? The IRS doesn't like it. That's why. They want to red flag you. When you're an S-corp, there's another way to do it, and it doesn't even show up on your corporate return. Okay, so you could safely write off your expenses. You immediately get great tax benefits. Why? Because that you're not taxed. You're not paying self-employment tax on your net profit on an S corp. It's what they call a flow-through activity. So that $10,000 net profit for the sole proprietor, it's zero if they were an S corp. It's zero. Now, there's some other complexities with that because at some point, if you're profitable, you got to start taking a salary, which means you got to start paying self-employment tax. I did not say you're not going to pay any taxes. If you're making money, you're going to have to pay taxes at some point. The thing is, you have control over how much and when you're going to pay it. Again, you get the legal protection. And as my friend, my new BFF, whatever that means, Pat Wally, he taught me that you can start establishing business credit. Now, what is business credit? Business credit is when you go and you get a line of credit and you're not personally guaranteeing it. You can't do that with a sole proprietor. Okay? So that's my story. I'm sticking with it. I got a secret special offer. If you contact me in the next couple of days, I'm going to tell you because I can set up your S-corp. And if you can't afford to pay me to do your S-corp, and I don't want you calling one of the online companies to do it, I have a do-it-yourself S-corp package that I can offer you that it's pennies on the dollar, and I will give you unlimited support to make sure that you do it correctly. Okay, so you don't need to be a lawyer. You don't need to go to LegalZoom or any of these other online companies to set up your own corporation. I don't recommend it, but sometimes, if you're living from week to week, and that's the conundrum we wind up in, folks. Small businesses don't have the money usually to pay a CPA like me for the advice and for the cost of setting it up. And I understand that, but that contributes to the problem. That contributes to the problem. So my solution is I came up with low-cost alternatives and a process of educating the public through things like my bedrockuniversity.com. You can go there. I didn't list it here, but I do have the do-it-yourself S-corp is part of the university. So if you go to the bedrockuniversity.com, you're going to get the do-it-yourself S-corp package in there. It's one price. You get unlimited access. And that's not all, folks. One of my instructors is my good friend Haley Gray. Yes, that's how I met Haley Gray, because I interviewed her because I wanted to know how the heck did she build a huge Facebook group in such a short amount of time. And that's how Haley and I met. I sought her out. She was a woman influencer. That's who I was looking for. And I said, oh my God, how did you do this? And I interviewed her, and it's part of the university. So thank you, Haley. Thank you, WEN members. I hope that, if I didn't teach you something, I hope I entertained you. And if I didn't entertain you, it's on you. You could have turned me off. So, all right, Joe DeChara, that's my story. I'm sticking with it. Bedrock University, bedrockbusinessbuilders.com. If you want to book an appointment with me, just go to timewithjoe.com and bring your notebook, because I will be asking you questions and asking you to take notes. All right, WEN members, have a good night. God bless.